Well, it's the day after the holiday, and thank God it's Friday. Good morning, everyone. Welcome to 55 minutes of current and relevant business conversations. That's what we do here in Business Morning. I'm Ini John Mekwa, and we start our conversation from the global space where crude futures jumped as much as 13% on Thursday evening after Israel launched airstrikes against Iran without U.S. support. They have to emphasize that, drawing concerns over the supply outlook from the oil-rich Middle East region. Now, that was 13% yesterday. For this morning, we see 7%. More than 7% for Brent, 7.05%. I mean, it's so hard to imagine a session of trade with a jump of 7%, 13%. So we see the price of Brent. The last time we were here, which was 2 days ago, we saw Brent at about $65. This morning, it's $74.25 a barrel, while this might be a good thing for the Nigerian government because remember, for the 2025 budget, the target is actually $75. So if we have this consistently, then that means more revenue for the Nigerian government, countries like the Nigerian government. But that's if we meet up with our quota. Of course, we'll have that later. For WTI, which is the major crude for the U.S., it's $73.32. That's also up more than 7%, 7.76%. Israel launched a targeted military operation against Iran's nuclear and ballistic program. Israeli Prime Minister shared this in an address. He said Israel hit Iran's main enrichment site at Natanz and its leading nuclear scientists and struck the heart of ballistic missile program. The International Atomic Agency said no increase in radiation levels was observed at the Natanz site following the attack on Friday morning, while the Ivan nuclear site was not impacted. U.S. Secretary of State Marco Rubio made clear that Israel had taken unilateral action against Iran without the support of the United States. He warns Iran against targeting U.S. interest. And so this is a major driver of the price of oil today, and we wonder how long that will last. Well, talking about Nigeria now, and also while this figure may look good for Nigeria, it depends on the volume of production. Latest data from the Nigerian Upstream Petroleum Regulatory Commission shows that for the month of May, lowest and peak combined crude oil and condensate production were 1.61 million barrels per day and 1.81 million barrels per day, respectively. The daily average production in May was 1.657 million. So this is NUPRC and not OPEC, because for OPEC it was about 1.4, because they combine the condensate and the major crude. So for even NUPRC, we see it's a drop. In April, it was 1.8 million barrels. Now it is 1.657 million barrels. The average crude oil production, they say, was 97% of OPEC quota. OPEC quota to Nigeria is 1.5 million barrels per day. According to data from them, that's the Nigerian Upstream Petroleum Regulatory Commission, crude output dropped from 1.48 million barrels in April, beg your pardon, to 1.5 in May. So it's a drop even from the NUPRC. So I guess we should expect a drop also from 1.4 that we saw last month from OPEC Plus. That OPEC, that's supposed to come in a couple of days. The Nigerian National Petroleum Company Limited, that's the NNPCL, says it recorded 5.891 trillion naira's revenue and 748 billion naira as net tax in April this year. According to its monthly report for the period released, the state oil firm says it also made statutory payment of 4.225 trillion naira between January and March this year. The report also shows that the NNPCL recorded 1.61 million barrels per day in crude oil and condensate production, 7.35 standard cubic feet daily in natural gas production, while the upstream pipe availability stood at 97% in April. The state oil company says it expects to conclude 4 critical final investment decisions. They call it FIDs. You know, that's what you have right here, FIDs, by the end of this year. Away from the oil space, ProShare, one of Nigeria's research and information services company in the financial sector, observes that banks' digital income as a proportion of their gross earnings have steadily risen, and this was part of the Tier 1 Banks report for the class of 2025. The chairman of ProShare, Olufemi Awoyemi, says while the numbers look good, more adoption of technology is one missing gap for the banks. Amidst the Central Bank of Nigeria directed recapitalization for banks, ProShare is sharing their assessments of Tier 1 banks in the country for the 4th year. Their findings shows that banks have so far collectively raised over 13 trillion naira in fresh equity capital.
More Nigerian banks will optimize their balance sheet by venturing into markets beyond Nigeria as they expand their customer bases and diversify their market risk. Tier 1 banks must be noted for their economic contributions as much as their balance sheet. Late last year and early this year, the research team at ProShare sat down and put together a review of GDP and under the economy with which banks operate. We were happy to conclude that we could break down the Nigerian economy into 14 economies. The 14 sub-economies will determine how the GDP flow will be.
Some of the points shared in the opening speech are elaborated by a panel made up of bankers and economists. The conversation begins with understanding how the huge numbers on the bank's books can be used to realize improved economic activities.
Our banks are very good in strategy, and they invest in it anyway. So I don't, therefore, have any issue with banks making profits. But then that must be balanced with how we connect what they do with the rest of the economy, especially the real sector. And that is where I think they should pay more attention. Capital is good, yes, they become bigger, and they have more muscle to finance transactions. But let them focus more on where the problems are.
And the future is hinged on technology.
What we will see in the next 10 years in the banking sector, digitalization will separate the whole core activity. But my concern is whether central bank, as we know it of today, is going to be, at speed with what is going on in the market.
Banks may take 4 weeks to disburse on that same particular loan, trying to study your behavior, look at all the C's of credit. But if technology can be improved on and can look at your pattern, spending pattern, look at your credibility, get details about you, and pull that down, give a scoring, and they begin to improve on it. So that is helping them to even go into credit faster than even the commercial bank.
From the perspective of ProShare and conversations here, the Tier 1 banks are getting bigger, braver, and dominant, but they need to connect with the real economy for impact. In a major shift in trade policy, China has announced plans to remove tariffs on all imports from African countries with which it maintains diplomatic relations. Chinese President Xi Jinping made the announcement in a letter addressed to African foreign ministers, stating that all 53 African countries with formal ties to Beijing will now receive zero tariff treatment for 100% of tariff lines. The move, which expands an earlier policy that granted zero tariff treatment only to least developed nations on the continent, is part of China's broader strategy to deepen economic ties with African nations as it navigates through tariff issues with the United States. Well, that's part of the conversation on strengthening the Sino-Africa economic ties in Changshan in China. Ladi has to teach me how to say that. Business leaders, policymakers, private sector delegates, they're all gathered for the China-Africa Private Sector Cooperation Forum for the year 2025. The high-level discussions is focusing on trade, infrastructure, and digital innovation, key drivers of growing partnership between the world's second largest economy and the African continent. Ladi Williams is there and sent in this report.
China-Africa collaboration is on the front burner in Changsha, China, as private sector players in China and Africa meet to strengthen trade ties. And data shows that China-Africa trade volume has grown from about $10 billion in the year 2000 to around $295 billion, positioning China as Africa's largest trading partner. Dr. Eric Ruto, president of Kenya National Chamber of Commerce and Industry, highlights what investors in Kenya are also exploring.
And to actively and practically participate, and I'll tell you that Kenyan investors and traders are currently increasing intra-African trade.
The Nigerian delegation from the Nigeria-China Strategic Partnership highlights efforts to diversify Nigeria's economy.
Was previously defined by monolithic products, oil and gas. But today, I'm happy to tell you that 90% of our production is no longer oil and gas. We've diversified into digital economy. We've gone into manufacturing. We are very much present in agriculture. And we have a lot to do on the African continent when you look at financial technology, fintech.
So China and Africa are stepping up the relationship as country and continent continue to push for more collaboration. And today, conversations began at the China-Africa Private Sector Cooperation Forum. And we see Changsha, China as the place to be right now with an estimated population of over 5 million people. This event is designed to boost trade relations, facilitate partnerships between Chinese and African businesses with trade, infrastructure, and investment. So today we had pitches from a couple of African countries, and definitely at the end of the day is to create that synergy between a continent as Africa and a giant as China. Ladi Williams reporting for Channels Television News in Changsha, China.
So it's Changsha, according to Ladi. Well, Ladi is right there and sends in a whole lot of details during Business Incorporated. He has sent in more of what's going on there and the conversation that he's capturing for us at Changsha, China, the China-Africa CEO conversation or forum. Right there. So we'll pick it up from there and look also. Yesterday was June 12, a very special day in the history of Nigeria. And yes, everybody yesterday was discussing democracy, the rule of law. But somewhere in there, of course, the economy always shows up. So this morning, let's look at a year-on-year performance of the Nigerian economy amidst the celebration of a sustained democracy. And we're doing that with Dr. Muda Yusuf, the Chief Executive Officer of Center for Promotion of Private Enterprises. Dr. Yusuf, good morning and welcome to the program.
Thank you, Ini.
So let's just see a little bit of some of the highlights of the economy. We'll start from inflation. Obviously, that's always top on the list. So we have inflation as of June 2024 was at 34.19%. And then what we have now, we don't have for June yet. We have for April. We don't have for May yet, beg your pardon. We have for April, and we see it's now 23.71. FDC is forecasting that it will go to 23.5 or 23.15. That's what FDC is forecasting. I think by next week we should be able to get the inflation for the month of May. Food inflation as of June 2024 was at 39.84%. Now, for April, which is the latest number that we have, it's 21.26%. GDP for as of June, that was like the second quarter of 2024, was at 3.19%. While the latest GDP we have, I guess we're still waiting for the rebase number, is 3.8 for the fourth quarter of 2024. Now, PMS, talking about transport, the major drivers of inflation in Nigeria seem to be transport and food. PMS on the average, as at June last year, very interesting, about 750 naira for a liter of petrol. Now it's over 1,000 naira, even though in Lagos we see it cheaper, but average for the country is what we're dealing with here. PMI, Purchasing Managers Index, was at 50.1, just at the tip, of growth. But for now, it's 52.7 for the month of May. MPR, that's the interest rate, was at 26.25. We had a little bit of movement, even though the last MPC it was sustained, but it's at 27.5%. These are the indices that capture the health of the Nigerian economy at this time. Dr. Yusuf, year on year, we see headline inflation has reduced, food inflation has reduced, GDP has increased, petrol price has increased, PMI is looking better, MPR is higher. What picture does it give of the state of Nigeria's economy?
You see, when we assess the health of the economy, the indicators or the metrics that you have filled out are more on the macro indicator side. If you look at it based on the macroeconomic indicators, I think the economy has been doing well over the last 1 year. There are indications of stability across all the key macroeconomic metrics. So to that extent, I think we can say that things are looking good as far as those macro indicators are concerned. You talked about exchange rate, you talk about particularly stability of the rates. That has been quite remarkable. We have seen the inflation rates, trending downwards, even though there are arguments as to the methodology and all of that. But I mean, even in the marketplace, there are indications of some prices that are dropping. And if you look at our trade balance as well, the trade balance has also been improving. We are beginning to see some surplus. So on the macro side, I think things are looking a lot much better. On the productivity side,
I thought you were going to say the micro.
Well, micro or productivity.
Okay.
Whether it is micro or productivity, I just want to simplify it. Because when we talk about micro, we are looking at how well the major actors are performing sectorally. And what cuts across all of them is the issue of productivity and competitiveness. If you look at it from that side, we still have a lot of issues. These things impact on, the cost of production. It impacts on the capacity of businesses to also create jobs, to retain jobs, and all of that. And the key factors influencing productivity are essentially what we call structural factors. Essentially, infrastructure, power, and more importantly, issues of logistics. We still have a lot of challenges around those areas in terms of productivity. So if we talk to the average business person, they are still grappling with the issue of the cost of production, cost of logistics, cost of power. Those issues are still there. So we still have major issues with respect to productivity. Then, from the perspective of the man on the street, what matters as far as the economy is concerned is the welfare. And the most important aspect of welfare issue is the cost of living. So generally, there's still a strong feeling out there, and rightly so, that the cost of living is still very high. Even though some of these numbers are showing that inflation is coming down and all of that, but the cost of living is still very high. So the struggle or the challenge that we have now is to get a connection, between the macro accomplishments or achievements and the welfare of the people. Because at the end of the day, people matter when you talk about the economy. The first 2 years for me has been a year of trying to fix some fundamentals. Has been a year of, have been years of trying to ensure that we stabilize the macroeconomic environment. And that is also very important, although people don't often appreciate it. But the macro fundamentals are like the foundations for the economy. You can't build something on nothing. If the foundation is weak, you cannot have a very strong superstructure. So what the government has done, in my view, is to stabilize the macro, which is looking good, both on the FX side, or even on the fiscal side. It's looking a lot better, particularly from the non-oil, revenue side. So from that, it's good. But we need to now ensure that the benefits trickles down.
Is there a way to accelerate that?
Well, the way to accelerate it is to ensure that we activate the major policy instruments, because these things have to be policy driven. I appreciate all this intervention, palliatives, and so on, but they don't address the systemic issues. So you need to drive these efforts through policy. And we have a number of policy instruments that we need to activate to ensure that the benefits of this reform impact on the lives of the people, because that is the next major challenge that the government needs to deal with. Now we have the fiscal policy, which is about how you appropriate resources to what sectors and so on and so forth. That needs to be activated or recalibrated to ensure that we deal with this issue of cost of living. Because sometimes when you look at the budget and look at the way these monies are spent, both at the federal and states, because this is also a matter for the federal and the subnational and even local governments, because all of them are appropriating resources. How well are they appropriating these resources to tackle the problem of the cost of living? That is one. We have the tax policy, which is also a major policy instrument. We just recently have this tax reform. The bills have been passed. The president will soon assent to it. How do we activate elements of that policy to address the issue of the cost of living? We have to be deliberate about this particular objective. We have the monetary policy. Yes, the monetary authorities have always told us they are for monetary stability and so on. But they have to bring something to the table as far as this cost of living crisis is concerned. So we need to challenge them, without prejudice to their autonomy and all these things. They need to bring something to the table. What can they bring to address this issue of the cost of living challenge? We have the trade policy. Trade policy is about policy that impacts import and exports. What can we bring to the table from the trade policy perspective? So the summary of what I'm saying is that we need to deploy policy instruments to achieve this. A major hurdle has been crossed, which is about macro stability. But we need to ensure that this stability translates to improved welfare.
So, Dr.
And also translates to improved productivity. Those are two major issues that we need to begin to tackle.
Yeah, so Dr. Yusuf, I'm glad you brought in the perspective of the subnationals, the states, because sometimes it does seem like all eyes on the federal and we forget the subnationals. For instance, in the issue of infrastructure, power, electricity, there's a law that allows the states to now generate, distribute, and all of that. But it doesn't seem like they're moving fast enough, because I am sure that the story now that in a state like Lagos, individual generation of power is enough and in excess of what we need, in the state if it was coordinated. So I guess we should put more searchlights on this second half of President Tinubu's administration on the subnationals and what they ought to be doing to increase this productivity we're talking about.
The subnationals have a lot of role to play in this. Now, if you talk of productivity, for instance, in agriculture, the role of the federal is to ensure that we have the right policies, maybe subsidy policy, trade policy, financing policy, then some key infrastructure. But for the subnationals, when it comes to productivity in agriculture, they have a much bigger role to play. Because you are talking about rural roads, for instance. Agricultural activity, particularly crop farming, is basically a rural activity. I know how farmers lament about access between their farms and the cities on the market. It's a major issue. So we need to engage the subnationals to address that. Then even the inputs, tractors, seedlings, and fertilizer, all of those things. The subnationals have a much bigger role to play to ensure that the farmers have because we have been hearing stories about increase revenue at the subnational level.
And autonomy of local government.
Autonomy of local government, direct remittance to their, these things should be spent to activate productivity issues, not to be building express roads. I'm not saying express roads are not good, or bridges or flyovers, but they should spread these resources in a way that is equitable, in a way that addresses the issue of productivity. Because it is through productivity that you can actually increase agricultural production, that you can also increase, jobs, employment.
But are the people intentional about, holding the state government, the local government accountable for them to live up to this expectation?
Well, that is an orientation that we need to change. Yes, there are issues at the federal, there's no doubt. But there's always this tendency to overlook the subnationals and the local governments and be focusing only on the federal. That orientation needs to change. Unfortunately, we don't have an effective institutional framework to ensure that we hold them very accountable, unfortunately. We have the state assemblies, but the state assemblies are not effective. Because sometimes you struggle to even distinguish between the assembly and the executive, especially at the state level. So we need to, activate or review our democracy to ensure that we hold the subnationals a lot more accountable. That is very important, so that they can also bring something to the table. As far as this productivity issue is concerned, as far as the welfare of the people is concerned. It's not enough for them to just be concentrating investment in the rural area, in the cities, in the state capitals. They should go beyond, and I must be fair to some states. Some of the states have been doing a lot to support agriculture, for instance, particularly up north, and sometimes, also in some of the other states, particularly in the southwest. But they need to do a lot more to ensure that they come down to the grassroots and impact on the people. Then the government also needs to activate policies at the level of agri-processing. Because when we talk about food production, it's not only about the farm. It's also about those who are in the value chain, because the value chain issue. If you produce at the farm level, it leaves the farm gate, what happens after that? What happens to processing? What happens to, preservation? Reducing post-harvest losses and all of that. So what exactly can we do to support directly, deliberately, the food processing companies, so that the ordinary people can have cheaper bread, they can have cheaper noodles? All of these things matter. Cooking oil. These are the things that the ordinary people want to see when they are talking about whether the economy has improved or not. So we have to be very conscious about all of this.
Yeah, and the people have a responsibility too.
Yes.
Thank you so much,
Yes,
Dr.
yes.
Muda Yusuf, Chief Executive Officer of Center for Promotion of Private Enterprises. Thank you for your time.
Thank you very much. Thank you.
All right, let's take a break now. When we come back, a couple of days ago, we talked about cross-border ticketing and some price disparity that's hurting the domestic sector back here in Nigeria. We'll talk about that in a moment. Please stay with us. Welcome back. It's still Business Morning right here on Channels Television. Well, a couple of days ago, we told you how the National Association of Nigeria Travel Agents, that's NANTA, they're asking the federal government to tackle the issue of cross-border ticket sales, where foreign agencies offer cheaper flight tickets for routes that are originating in Nigeria. Well, to help us to understand the situation better and what they want the federal government exactly to do, we have the Managing Director and Chief Executive Officer of Topaz Travels and Tours Limited. She's also the president of that association, NANTA, Ms. Susan Akporaye. Ms. Akporaye, good morning and welcome to the program.
Good morning, Ine. I think let me make a correction, Ine, and let me bring you up to date. I'm no longer the president of NANTA. I have finished my tenure last year, 2024. We had a successful election and a successful handover to the new president in the person of Mr. Yinka Folami.
All right, thank you for that. So at least we know you as the managing director of Topaz Travels and Tours Limited. But
That's correct. That's correct. Thank you.
All right. So tell us about this cross-border ticket sales.
Okay, in simple and layman terms, you already said it actually. There's what they call point of sale. I mean, I'll use myself as an example here. Topaz Travels, if I have to issue tickets from Abuja to London and back to Abuja, and a colleague of mine, travel agency ABC in London or in Dubai or in any other country, issues the same Abuja to London, Abuja, they get it cheaper from their end than I will get from my end. And that is resulting to a lot of our members that wants to remain in business. You can't really blame them. If not, they will be priced out of business. So a lot of the members have to start patronizing their colleagues in this country just to remain in business and give their clients competitive fares. And that is what cross-border trading is all about. And with that action, our flights are filled up from Nigeria, whether Lagos or Abuja, but they are not being sold by us. Higher percentage of those flights that are full are being sold outside. Like the current president has done a lot of investigation on this, and we have come up with the data that already our market has been eroded by 40%. Meaning for a full flight from Nigeria to the UK, I mean 40% of that sale is not from travel agencies in Nigeria. So that's what the cross-border trading is all about, and it's really affecting our market. And we are all out in trying to protect our market, and the current president is doing a great job at that.
So what are the factors that make it more expensive for those tickets to be booked from Nigeria compared, to outside the country?
Okay, cross-border trading is not the same thing as fair pricing, because for fair pricing, they will tell you the taxes in Nigeria are high, hence the reason why the fares are high. But that's not the issue, because it's the same point of sale from Nigeria. Passengers are departing from Nigeria outside. Now, I'm sure, Ine, that's one of the things why you like me. I like being practical. I am not just an owner of a travel agency. I'm also hands-on on my job. Yeah, now this is how it works. I'm sure you are aware they have different classes. Like in economy class, you can have up to like 10, for example. So what happens is my investigation, because I'm a travel agent, I practice every day, that I've noticed is that, for instance, we have 10 classes on economy, for instance, now. And for me, registered in Nigeria, with the GDS that I use, the Global Distribution System that we all use, airline uses it, agents all over the world also uses it. But your GDS is registered based on your location. So my GDS is registered in Nigeria as an agent in Nigeria. My IATA is also registered as an agent in Nigeria. Now, these platforms are being loaded with the different classes. So if a particular airline has 10 different classes for economy, now this is what happens. From my own end, when I open my global distribution system to check for a fare to somebody from Nigeria to London, and I open my system, I see only the 7 classes. That is what is available and is opened up to me. And of course, the lowest of the 7 class is what I can offer. Now, a colleague of mine in London will open our own system, opening Abuja to London, Abuja, will see those other 3 classes that was not made available for me. So invariably, those 3 classes will now make it a bit cheaper. So by the time I can see those last 3 classes, I'm only restricted to the 7th one. And the 8th, 9th, and 10th. The 10th one is always the cheapest and the lowest. Now, that I cannot see from my system. And I cannot sell what I cannot see. So now my colleague over there opens his our own system, and he sees everything even to the lowest. That's the 10th. And he quotes that 10th to a client in Nigeria. And I quote the 7th to my clients in Nigeria. Guess what? Because he's seeing the lowest, his own quote should be cheaper. So therefore, in that case now, I mean, if it's a direct client, it will buy from that person rather than buying from me. Then of course, for we travel agency, what happens is, because we want to remain in business and we want to service our clients, we don't want to lose our client. So once we have found out that that's what is going on, which is what is happening, what I will now do to remain competitive and not to lose my client, I reach out to my colleague, and guess what? That colleague might be a friend because we have a global network, we interact. I reach out to my colleague, please check your system. Can you see the lowest on your side? And my colleague say, yes, I can see. Can you please give me the price and sell it to me so that I can sell to my client? And I tell my client, okay, this is it. My client pays me, and the rest is history. I do the transmission later. So in that case, now, my colleague in London is the one that sold that ticket for that passenger. Even though the passenger knows me, he sold that ticket. And that ticket is Nigeria, London, Nigeria. And it's being sold in a registered agency in the UK. So you see, that is why we said that 40% of the load factor of all these airlines are being sold outside, even though they are Nigerians traveling, just because the fares are more competitive than what we have.
So when you say
So that's
you want the government to intervene, how or where does this intervention come from?
Oh yes, no, like I said, the current president Yinka Folami is doing a lot already, and the way NANTA is structured as the immediate past president, I'm still in the council, so I'm privileged to know all the hard work and all the things that the current president administration is currently doing. I can tell you for sure, because I'm still part of the administration, that we have of course made our position known to the Ministry of Aviation, to the minister, and even to CBN, to our regulators, the NCAA, and a very well detailed document of what is going on to make them understand. And of course, there were also recommendations that the president has made to the Ministry of Aviation. And one of the recommendations that in the letter that I believe that was sent out by the president to the ministry is the fact that let's start coming up with policies to protect the local market, because it's just a matter of time. All of us will be out. We might not necessarily be out of business, but definitely we will lose our market. So we will all become sub-agents to agents outside the country. And again, the airline workers, staffs too, stand a chance of losing their position and losing their job. I mean, if it was you, Ini, the headquarters of all these airlines are domiciled in their own country. I mean, for instance, an airline in London is domiciled in London and they have their office here. The flights are being filled up, but it's not being filled by the market that the representative of the airline is in. It's just a matter of time. The bosses in the headquarters is going to tell him, you know what, I don't think there's a need for your job there anymore. We are filling our flight from Nigeria and we are not the ones selling it. It's not coming from your market. So the airlines too stand a chance of risking, I mean, airlines are risking their job too in this market, eroding the market. For us, we're going to lose our market. I mean, they will not have any defense. What will be the defense why more airlines should be coming to Nigeria? Absolutely no reason, because they will tell themselves that we as the travel agencies in Nigeria, we're not doing anything. We're not selling our market. Somebody else is selling the market for us. So we will lose opportunity for incentive. We will lose opportunity of making direct sales. So we will all become one big sub-agent to our colleagues outside the country. And one of the things that recommendation that was made by the President Folami was that the government, the ministry should start looking at policies to protect us, policies to protect our market. I'm sure in this other market, I don't live in those markets and I don't have offices in any other market apart from Nigeria. So I cannot speak as an authority whether they have such policies or not. But I'm sure they do, because those markets are more organized. So I'm sure they do. They have such policies. So we in NANTA, led by the able president and capacity president Yinka Folami, we are proposing that the government, through the Ministry of Aviation, to start looking at bringing out policies that will protect us, protect our market, protect we Nigerians that are in this market. And of course, regulations against discriminating pricing. So, like I explained to you, the airlines might argue is not much of a price thing, which I've just explained to you. Is the fact that those inventories of the lower prices are not being open to us, because each market has their own inventory and the price they sell. That is how the industry works. There are some classes that will not sell from here, to sell from another market. So what we are saying is that give us the advantage, because as the point of sale agent, I should have an advantage over any other agent that is not residing in Nigeria. By all means, agents in London, if they have to issue London, Nigeria, London, they should have an advantage because it is their market. Protect them. I'm okay with that. They should have it cheaper. They should have all the classes, cheaper classes, because it is their market. So for me, this is my market too as well. Nigeria, London, Nigeria. I should have more advantage, and that is what the airline is not giving to us. So one of the recommendations that the president of NANTA has also done is regulation against discriminatory pricing. That also has to be done. Then, of course, the president is also very big on checking practices on ethical practices. He's also very big on that too as well, on checking on ethical practices. Are these foreign agencies that are helping to erode our market, are there some unethical practices that they are involved in? The government needs to look into it. So those are the things that NANTA has made, the proposal and the recommendation that the NANTA president that has made to the Ministry of Aviation and of course to CBN, and I'm aware letters have gone out on this issue. We've told them the problems and we have made the recommendation. Like
All
I
right.
said, market policies to protect our market.
All right, all right. Because we're almost out of time, but I really need to ask this. We appreciate that, and I guess that's why we have this as a topic of conversation. But I'm also curious, just briefly now, why is it so expensive to travel within the continent? Sometimes it does seem even cheaper or the same price. If you want to go to a neighboring country, I went to Abidjan and paid over $1 million for tickets, which is just in our neighborhood. What's making this intra-African communication and cooperation so hard?
Amy, I'm sure you're talking from experience.
Yes, I was in Abidjan a couple of weeks ago, and you know,
Yes, I know.
paying almost
I know.
$2 million for a ticket in Abidjan is heartbreaking.
It's a problem. It's a problem. When I was president of NANTA, I was one of my agendas was the AFCFT agenda: travel within Africa, do business within Africa. That has always been a bottleneck. As much as we have tried, traveling within Africa is ridiculous. We just came back. NANTA just came back from a conference in Gambia, and we are having tickets as much as 1.8 million, 2 million, 2.2 million. And members were like, come on, I can go to US for less than that. But thank God for the likes of Airpeace that made it possible. If not, that trip would not have been possible. Now, there's a lot of factors behind the scene. I'm sure you're aware of Saturn. It was set up by after the AFTA agenda. They looked into it and they found out that country taxes within Africa is so high. And I was talking with the chairman of Airpeace on why this price, if there's a way it can make the price lower. And it was like, Susan, the taxes that the Gambia government charges him, landing taxes and all that, is so high. So in as much as he wants it to be low, it's not possible. No, SATIM was set up, Single African Air Travel Market. The purpose of SATIM was to see how African countries, at least for a start, regionalize, region by region, like the West Africa. Because when you want to start an initiative, it's gradual. And the best way to achieve it is to make it to regionalize it. So now we are saying, let each region, for instance, the West African region, the governments of the West African region, let them come together. The certain idea is to let's have a single air traffic market. If there's a way we can pull our ideas together and make sure we have one single pricing for our taxes and not different taxes flying up and down and so expensive. If that can happen, it's going to drastically drop the price. That was why SATIM was set up, and I believe is one of our own, a Nigerian that is the SecGen of SATIM. And she's doing a lot in that aspect. She's going around African countries, meeting with Ministry of Aviation to make sure we come up with that. That is the only way fares can be affordable in Africa.
All
That
right.
is why they're expensive. But if you look at other regions, Europe has gotten it right. If you notice fares around Europe, they're within the same bracket. You can't get anything too high. So they've gotten it right. The Americans have gotten it right. Africa needs to also get it right. And we are already in the top. My prayer is let the talks begin to yield fruits and let's begin to see the difference. But
All
the
right.
answer lies within us.
Okay, yes, obviously, Susan, and I pray with you too. Trust me, this one I'm in it. we need
Yes, yes.
we need to make it cheaper. Thank you so much, immediate past president of National Association of Nigeria Travel Agencies, that's NANTA, and also the chief executive officer and managing director of Topaz Travels and Tours Limited. Thank you so much for your passion and your insights.
Thank you, Ini. Thank you. It's always a pleasure.
Same here. We'll fly over to the global space. Will is standing by. Will, I know this concerns you too, because in your next holiday, you want to travel to an African country, and it's going to cost you a whole lot.
If I have to pay over close to 2 million naira to go to an African, why don't I just think of going to the Bahamas? Enjoy myself. No, this is one of the things we have to consider, and she's very right. And you're right to actually bring this up. We need to do better when it comes to our relationship and cooperation. It's not just about the talk. We should stop talking and walk the talk. Not after, not all the summits. It's about how do we actually actualize this and make Africa better for all of us. And so we'll be happy. We don't have to go outside the country to enjoy the beauties and sceneries that we have. We have everything we need, but we can't even really move around because
even
of the
in
cost.
Nigeria, Will. But anyway, let's just
don't stop me in my tracks.
Sorry, let's just.
Well, it's all right. Let's just see how global. Things are not looking so great in the Middle East. Investors rushed to safe haven assets on Friday after Israel launched a series of airstrikes on Iran, escalating tensions in the Middle East. The attacks reportedly targeted Iran's nuclear sites. Markets reacted swiftly, with investors seeking safety in gold and other stable assets. Gold prices jumped to nearly a 2-month high, while analysts are warning of broader volatility and risk of regional conflict. Spot gold was up 1.1% at $3,420.24, while gold futures for August rose 1.3% in early trading. Meanwhile, U.S. Treasury yields dipped on Friday as investors rushed to safer assets following Israeli airstrikes on Iran. The benchmark 10-year yield fell to 4.33% in early trading. The market reaction came after Israel struck sites linked to Iran's nuclear program. Investors are now watching for more fallout, with U.S. consumer sentiment data also expected later today. Analysts say bond yields may remain volatile as the geopolitical tension unfolds. Staying in the U.S., President Trump called Fed Chair Jerome Powell a numbskull on Thursday, urging a 2-point rate cut to save the U.S. $600 billion annually. He said inflation is low and warned, "I may have to force something." Now, Commerce Secretary Lutnick and Vice President J.D. Vance also criticized Powell, saying the Fed is ignoring clear signals to cut rates. The comments came after weak U.S. producer price data eased inflation fears. Markets were steady, with no rate cut expected next week. However, traders now see a 76% chance of a cut in September, up from 69% the day before. Now let's go to the EU. Germany's economy is now expected to grow by 0.3% in 2025, up from an earlier forecast of 0.1%, according to DIW Berlin. The upgrade follows stronger than expected Q1 growth of 0.4%, marking a rebound after 2 years of economic decline. DIW says momentum should continue later this year, supported by a government investment package aimed at boosting recovery. Now, Sweden's inflation rose to 2.3% in May, hitting the central bank's target, according to data from the National Statistics Agency. Prices were up 0.1% from April, while the CPIF, the key measure used by the Risk Bank, also rose 2.3% from a year earlier, in line with forecasts. The data gives Sweden's central bank more clarity as it weighs possible changes to interest rates in the months ahead. And let's see Slovakia. The annual inflation edged up to 4.1% in May, with monthly consumer prices rising 0.5%, Core inflation stood at 3.3% year-on-year, in line with expectations. Higher service and food costs were key drivers, with food and beverages up 1.3% from April. Meanwhile, fuel prices fell 8% year-on-year, helping offset some inflationary pressure. Housing, restaurants, and cultural services also pushed the inflation rate higher, each contributing noticeably to the year-on-year increase. Now let's see how Tesla is doing. It has upgraded its Model S and X vehicles in the U.S. and raised prices by $5,000 across all versions. The Model S now starts at $84,990 with the Plaid variant priced at $99,990. The Model X begins at $89,990 while its Plaid version costs $104,999 to be precise. Now, the company shared the update via social media and its website, though specific upgrade details were not disclosed. Now, still speaking of tech and cars and vehicles, Apple's iPhone was the best-selling smartphone in China in May, according to new data from Counterpoint Research. The tech giant also saw global iPhone sales rise 15% year-on-year in April and May, its strongest two-point stretch since the pandemic. Now, growth was fueled by gains in the U.S. and China, Apple's biggest markets, along with double-digit sales boost in Japan, India, and the Middle East. To stay ahead in China's competitive market, Apple slashed prices on its iPhone 16 models with some discounts reaching over $350 on local e-commerce platforms. Now, India is stepping up efforts to develop its rare earth industry after China's export curbs disrupted global supply chains. The government plans to scale up production through state-owned India rare earth and private sector support. With the world's third largest reserves, experts say India could become a key alternative to China. But major investments in mining and processing are still needed. Meanwhile, India is negotiating import approvals with China, and local automakers are preparing to visit the country to secure rare earth magnet supplies. A lot is going on now. So India is very now trying to eye the market. China is restricting.
It looks more like India is stepping in to become an alternative.
Yes. You see iPhone going to India, leaving China. So India may very well take over in the next.
But guess what?
Manufacturing.
China is also being very strategic. I don't know if you saw the news where no more tariffs for African countries, between African countries and China.
Oh my God, I missed that.
So if US is going to India, then China is coming to Africa, and it's just opportunities.
So it's just like opportunity, looking for alternatives and see how, now if African governments will make it work for Africa, not just make it work for just China, it will benefit us as well as benefit them. So it's a win-win and not just, the usual we have here.
I guess. I hope so. Thank you so much, Will. We'll do this again at 1 p.m. And that's it on the program. Thank you so much for being a part of Business Morning today. It's Friday, but it's not over yet. 1 p.m. Will and I will be back to give you updates from the world of business, especially from the African perspective and a little bit outside Africa. That's at 1 p.m. and I'll be back. I'll talk to you then. I'm Ini John Mekwa.